Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. A sharp fall on the Lal Street. The sensex loses nearly 500 points. Nifty down over 200 points. The biggest single-day decline in 4 months. IT stocks get battered in trade after Infosys cuts its growth outlook sharply. Reliance Industries is likely to report a 2% rise in revenue in the first quarter. Growth in Reliance Jio in the retail business is likely to offset the pressures faced by the oil and gas business. U.S. lawmakers express concerns over deficient compliance standards of Indian and Chinese pharma companies. Asked the American drug regulator to inform about their plans to reinstate unannounced inspections in India and China. Both Indian and Chinese manufacturers received the most amount of FDA warning letters. Around a dozen casinos in Sikkim and Goa have come under the GST scanner. Sources say authorities are probing alleged tax avoidance to the tune of 10,000 crore rupees. They allege casinos paid only 18% GST when the rate is 28% and also made fake input tax credit claims. Parliament disrupted for the second day amidst uproar over the Manipur video where 2 women were paraded naked and sexually assaulted. Defence Minister Rajnath Singh says the government is ready to debate. Opposition demands a statement from the Prime Minister inside Parliament on the situation in Manipur. Day 2 of rescue operations at the landslide hit Ishalvaldi village in Maharashtra's Raigad district. At least 18 people have lost their lives. Over 100 people feared trapped under the debris. The government informs Parliament that nearly 18 lakh Indians have given up their citizenship and migrated to other nations since 2011. Over 2,25,000 Indians renounced their citizenship in 2022 alone, the highest since 2011. The aviation regulator accepts Go First resumption plan, allows it to restart flight operations subject to conditions, says the airline can start ticket sales only after the flight schedule has been approved. Also on the show, the business of Barbie. We explained why the makers of the movie, which releases today, spent $100 million on just marketing. A special report coming up. Well, let's start with the market action this Friday afternoon. After rallying for 2 days, the Sensex and the Nifty did see a sharp fall in trade. The Sensex lost nearly 900 points. The Nifty lost over 230 points. And this was the biggest single-day fall that we've seen both for the Sensex and the Nifty. As you can see, that's the fall that we've seen in the last 4 months, the biggest single-day fall. IT stocks were the main laggards, and they will show up on your screens. And this is really on the back of the fact that Infosys saw its guidance cut unexpectedly and very sharply overnight, and that led to a beating down as far as IT stocks were concerned. Prashant is standing by now to take us through the market action. Prashant.
Well, it was not to be. That is Nifty at 20,000. Infosys came in the way. It was clear Infosys was down. The ADR was down sharply, and when we came in this morning, it was to be expected that the stock would take tank. The extent of the damage for the broader market perhaps came as a bit of a surprise. But indices first. Nifty on your screen down about 200. Banks yo-yoed through the course of the day, never kept one-sided direction. And mid-caps and small-caps saw some profit booking as well. Friday to Friday, that is for the week, things are not looking bad at all. Nifty is up, but the Bank Nifty is up even more. And the small-cap index actually is up some 3% or so. As I said, techs did the bulk of the damage. Infosys was down sharply, but it took other large-cap tech stocks down as well. TCS, HCL Tech, Tech Mahindra, Wipro were some of the others. The other losers, apart from the large tech names, were Reliance, Lever, reacting to numbers, and ITC, which had run up, which saw some pullback. Actually, it was 3 or 4 large IT names and Reliance, which accounted for pretty much 100% of the losses that you're seeing on the Nifty today. In the broader market as well, pressure coming through in tech names, Persistent, Coforge, KPIT, a couple of them reporting numbers, and numbers there also did not look good. Havells, Polycab and South Indian Bank were some of the other losers. Polycab, of course, had run up very sharply after earnings. In the broader markets, rail PSUs did well. RVNL, Railtel, IRCON, IRFC, a standout. And there were some gainers as well. So earnings-related gainers, that is. IndiaMart sharply higher. United Spirits, blockbuster numbers. And Atul reported around in the last 2 hours of trade. And the stock doing very, very well. So it's been down, but largely I think you can put the blame on IT stocks. Global cues become a little important. I mean, dollar has been moving a little higher. Yields are starting to perk up a little bit. So in that sense, Friday's session in the US, and of course the data becomes important inputs when we come back on Monday. Back to you.
All right, Prashant, many thanks for joining us. That was the market action. And staying with the market, shares of HUL fell in trade a day after the FMCG giant's first quarter earnings, which missed street estimates. Now, brokerages say that the outlook is cautious and recovery will take time due to macroeconomic headwinds, and that HUL needs to watch out for weather risks. In fact, this is a risk that management itself highlighted yesterday. The big IT companies have released their first quarter results for the fiscal year. Shares of Infosys sliding significantly in trade today after the company delivered a shocking cut in its guidance. Meanwhile, several mid-cap companies, including Coforge and Persistent Systems, struck an upbeat note in their growth outlook. However, all of these companies agree there are uncertainties and headwinds in the market. Well, Reliance Industries will report its first quarter earnings later today. Sonia standing by with the key expectations for the overall business. Sonia, what's the street working with?
Let me start with the stock performance first. Reliance Industries has had a great run up until now. In fact, the stock is sitting at a 52-week high and is up almost 30% from the lows that we saw in the month of March. But let me run you through the basic numbers and then I'll talk about the key businesses. It's expected to be a slightly muted quarter this time around for Reliance Industries. On the top line, we're expecting a marginal growth to about 2.18 lakh crores compared to 2.13 lakh crores last quarter. The pressure will seep into the operational front. So look at this. 0.5% lower EBITDA is what we're looking at. The margins could come under a bit of pressure as well. And on the profitability front, we're expecting a 14% fall compared to what they've seen last quarter. So where does the pressure lie? Now, it's expected to be a mixed bag this time. While the refining segment has been under pressure globally and for Reliance Industries, the consumer businesses continue to be very steady. So let's talk about the refining business first. There is a dip in the refining margins this time around. In fact, Singapore gross refining margins have come in at $4 a barrel, which is a fall of 51% quarter on quarter because of the decline that we've seen in the cracks. Apart from that, if you look at the refining business, the dip in this segment will more than offset the higher petchem margins. And overall, in Q1, the gross refining margins for Reliance Industries are expected to fall 31% quarter on quarter. But let's move to the consumer businesses, which have been very steady, both Jio as well as retail. On Jio, the subscriber additions will be a healthy 25% higher than what we saw last quarter, coming in at 8 million subscribers. And even if you look at, the core business, there's a 15% year-on-year EBITDA growth that we're looking at, while the margins will be steady at 52.4%. Even the retail business has grown very well. So there's a 20% revenue growth, a 32% EBITDA growth in the retail business. That's largely because of an increased store footprint and better operating leverage. Now, there are a couple of things that the street will look forward to in the numbers this time. One of them is any developments on the new energy business. In fact, Goldman Sachs put out a report where they are valuing the new energy business at a base case at $29 billion. So any update on that will excite the street. Apart from that, all eyes will be on the AGM and details of the Jio Financial demerger.
Is the standard disclaimer on your screens. And staying with earnings, Ultratech Cement reported a mixed set of numbers for Q1. The company's net profit and revenue ahead of street expectations. Margins missed the mark. On the yearly basis, the company's net profit jumped nearly 7%. Revenue was up 17%. Domestic sales volume grew 20%. JSW Steel beat street estimates on all fronts in the first quarter, that is. Net profit nearly tripled on a yearly basis to over 2,400 crore rupees. Revenue jumped by 11% to more than 42,000 crore rupees. EBITDA margin also ahead of expectations. And Ashok Leyland posting a strong set for the first quarter, beating street expectations on net profit and revenue. The company's profits jumped over 8 times that of the same time last year, while revenues are up over 13%. Margins also beating street expectations of 8.7%, coming in at 10%. The big story that is breaking this evening, the aviation regulator, that is the DGCA, has now accepted cash-strapped Go First plan to resume flight operations, but it comes with several conditions. The regulator has said that the airline can start the sale of tickets, but only after the approval of its flight schedule. Danish is standing by with more details. Danish, it's not as if Go First is going to fly from tomorrow, but let's talk about what the DGCA has said. What are the conditions that Go First must comply with before it relaunches?
Well, in a big development for Go First, the Director General of Civil Aviation has approved the day plan, the resumption plan of Go First. As per the resumption plan that has been approved by DGCA, the Go First is allowed right now to fly over 100 flights per day using 15 aircraft. But all of this comes with the rider, as the Go First has to ensure a lot of compliances. They have to ensure the airworthiness of all the aircraft that they have, and the biggest catch in all of this resumption plan is the fact that DGCA has asked Go First to come out with a proper financial plan, and plus Go First also has to give certain details about the pilots that are available for the aircraft and the engineers that are available, and similarly what is the status of the cabin crew that is there. So they need to provide a lot of more information to the DGCA. But as of now, there's not one particular date when we can expect Go First to resume operations, but they now have to again go back to DGCA. They have to give them a proper flight plan. Then only they can start the new ticket sales, as well as they can resume the operations. And DGCA has also given this condition to Go First that whatever outcome of the resumption plan may be, but it will all be synchronized with whatever order the Delhi High Court passes. Because right now, if we see, the Go First is currently caught with a lot of regulatory hurdles. Right now, we are seeing that there are a few matters that are going on in the NCLT as well as in the Delhi High Court. So once a green signal is given from the courts, then Go First will come out with a particular date when we will see that Go First will be resuming its flight operations. But all in all, if we see in a big development and in a breather for Go First, DGCA has approved the resumption plan of the airline.
All right, Danish, appreciate you joining us. Joining us now is M.R. Sivaraman, the former Director General of Civil Aviation. Mr. Sivaraman, many thanks for joining us. Well, this is a significant step for Go First. As I pointed out, there is still a distance before we can see the airline restart its operations. But with the DGCA saying, all right, the flight plan is approved subject to conditions, what do you make of the development?
See, according to the condition that has been narrated just now, it seems that the Go Air has got a long way to go before they are able to fulfill all those conditions. The second most important thing is, what have they done about the engines that they may require? Suppose one engine fails somewhere, or the aircraft is grounded for some reason or the other. Do they have enough spare parts from Pratt & Whitney company by which they can assure themselves that no aircraft will be grounded for engine problems? That is something which the DGCA would have definitely looked into, and whether they have put it as a condition, I do not know, because that's a global problem which Pratt & Whitney was facing with all its clients. So this is something which they have to ensure. Secondly, as far as the pilots are concerned, because the old pilots will be coming back into service again, they may have to be retrained again in the same aircraft for which they had been trained, because they would have been on ground for some time, and now this is the monsoon season. So during monsoon season, they had to be given monsoon checks, whether the DGC is ready through its flight inspection directorate to give them the monsoon checks. So while the Go Air is getting ready all these the conditions, agreeing to all these conditions, they could as well call their pilots to duty and ask the DGCA to give them the monsoon checks or retraining, so that they are ready to fly the aircraft when they are given the full permission by the DGCA.
Yes, Mr. Sivaraman, you're absolutely right in pointing out that it is still a distance away. And we do need to, of course, as the DGCA is also pointing out, we do need to see what happens both at the NCLT as well as the Delhi High Court, and the question of funding, because that is going to be crucial as well to this revival plan.
Yeah, funding is very important. Probably they would have tied up funding, or they may be even putting in the promoters' contribution towards reviving the airline. But what I am worried is when they are bringing in the pilots, whether they are ready to fly the aircraft in the monsoon season. Because usually before the monsoon season, the DGCA ensures that all pilots are given monsoon checks so that they are able to land during heavy weather conditions or fly during heavy weather conditions. This is something the DGCA will have to ensure, and the Go Air people will have to be given this instruction that they should recall the pilots whomsoever they want, but they should be given retraining, and they should be given proper monsoon checks by the Flight Inspection Directorate of the DGCA.
Yes, that is going to be crucial. We've also seen that many Go First pilots have in fact decided to opt out and move to other airlines given the predicament that the airline finds itself in. But we will wait to see how this story continues to develop from here on. Mr. Sivaraman, many thanks for joining us here on CNBC TV18 with your quick thoughts on the developments that have happened at the DGCA today with respect to Go First is restarting its operations. Up next, the business of Barbie. We explain why the makers of the movie, which releases today, spent $100 million just on marketing. Well, a CNBC TV18 News break is now confirmed. The government has clarified that overseas credit card spends will be counted for the Liberalised Remittance Scheme, or the LRS, and TCS when banks and credit card networks are ready. Sapna joins us now with the details. Sapna, you had broken this story. It is now confirmed. So we're not looking at a start of credit cards being brought under LRS in October, but it looks like it certainly will happen post that once the banks are ready.
Absolutely. Post-October is what the government is looking at as of now. And, you know, we have had this exclusive conversation with the Economic Affairs Secretary, Mr. Ajay Seth, wherein I had put up this question as to what really is the issue. Why do the networks, the card networks and banks need that much more time? And he has explained it very lucidly. So there are two aspects to this. One, of course, is the fact that what is the purpose of the usage of the credit card overseas? Because there are differential rates of TCS. For tourism purposes, it's a 20% flat. For other purposes, the rates are different. The rates are lower. On certain things, there are no rates. So, so one is that the purpose has to be defined, and according to the TCS rate will have to be decided. And the second, of course, is the aggregation of the 7 lakh rupee limit, because up to that exemption, these kind of spends will not be counted under the Reserve Bank of India's Liberalised Remittance Scheme. Now, since the credit cards will be brought under LRS for the first time, both not just the banks, but especially the card networks need that much of time to gear up their system so that the verification of the details can happen. Also, in terms of the information that we receive from the merchant point. So, because of that, the scenario has developed that more time will be required. But post October, yes, we can hear something on this front for sure. Let's just hear out what the Economic Affairs Secretary, Mr. Ajay Seth, had to say on this matter.
There are two aspects to this. One is a purpose, because they're based on the purpose, there's a differential TCS. The second one is this limit of 7 lakhs. Less than 7 lakhs, either it is exempt, or meaning that there's no taxation or no TCS, etc. So then aggregation also has to happen. Banks as well as card networks requires more time, and when they are ready, then the decision has to be implemented.
That is the Economic Affairs Secretary speaking with Sapna. Now, from an iconic toy to the silver screen, the much-awaited movie Barbie releases commercially worldwide today. The film, starring Margot Robbie and Ryan Gosling, is expected to rake in more than $110 million in its debut weekend at the US box office. The movie's marketing team has been painting every town pink leading up to its premiere, spending $100 million on just marketing. Ekta Batra explains the Barbie marketing blitz.
Barbie, the doll that was introduced in 1959 and generated $1.5 billion of sales for Mattel in 2022, is serious business. With 86 million dolls sold in 2021 globally, that means 164 dolls being bought every minute. Mattel is banking on the Barbie movie to help monetize this iconic household brand outside the toy aisle. The Barbie movie, that was originally commissioned in 2009 and apparently caused a shortage of fluorescent pink paint during production this year, reportedly cost $145 million to make, with $100 million spent on marketing the movie. Mattel, which has been working on partnerships for the past year and a half, has secured more than 100 brand partnership deals targeting all ages ahead of the movie release. The partnerships range from Barbie Xbox, which is a console nestled in a 3-story dream house, to renting a bright pink Barbie Malibu dream house on Airbnb, to even buying a burger with pink sauce at Burger King. The brand is targeting all types of brands, from high-end clothing brands to the more affordable Gap and Forever 21, to shoe brands such as Aldo and Crocs. One can also buy a Barbie-themed fossil watch, to pool floats, to electric toothbrushes, donuts, or even generate a Barbie selfie. And it's just not brand partnerships. Barbie has literally painted cities pink, from Barbie-themed public transport to renaming subway stations to even lighting up landmarks in London in pink ahead of the premiere. The buzz created has also resulted in brands and companies just cashing into what is called the Barbie core aesthetic, from Barbie-themed pop-ups, parties to drinks such as glittery beer, with pink accounting for up to 15% of some clothing brand sales. Yes, while Barbie is likely to make back the $100 million in just, say, a few days of its release, the idea behind the collaborations is a part of Mattel's strategy to create brand awareness and expand Barbie's world beyond toys as it sees growth opportunities in these franchise deals as exponential. Mattel, which made over $5 billion in revenue last year, was paid $25 to $50 million by Warner Brothers to make the movie, either gets paid a flat licensing fee or 5 to 15% of sales on any collaboration. The aim for Mattel is to monetize the brand outside the toy aisle while everyone is playing with Barbie, but not necessarily the doll.
All right, Ekta, many thanks for joining us. That is the Barbie economy for you. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Stay tuned. Our Friday favorite comes up next.